So I have been asked to talk about two major areas, especially crop umbrella covers obviously a lot of them. To do a little bit of overview on pinto beans, some on navy beans, and also on barley, primarily malt barley. So there's a lot to go over. I only have 102 slides, so you should be pretty quick. No, we're gonna figure this out together. There's a lot of dynamics going on. The other challenge we have in a lot of especially crops is getting really good information about what's happening within the market is really tricky. Anybody who's been dealing with this for a while, you understand that a lot of folks in the industry are very quiet. They don't want to say a lot. I do my best to keep up with what's happening. I watch a lot of different reports in other areas in the US, but also from Canada. The Canadian folks report pretty well. So I'm going to start with the dry bean market. We'll start out with pinto beans or just dry beans in general. And I really enjoy coming to this program. I just wish it was a couple of weeks later, because we would have a lot more information about what's going on in the dry bean market. So we circling your calendar on January, Friday, January 12th, if you notice on the very bottom, we're going to get some 4 major reports from USDA. One of those is the final official production numbers. And from the dry bean market, the reason that's important is because then we get information about dry bean production by class. Pintos versus natives versus blacks versus pinks, etc. Right now, all we have is dry beans like lumped together. But this does help the stage and kind of set the tone for the market as we move through the rest of the year. So in 2023, North Dakota's production was down about 22%, recognizing last year was a pretty good year, not only from an acreage standpoint, but also from a yield standpoint. When we look at nationally within the US, we're down about 13%. Again, that's by all classes blended together. So I'm going to get into pintos in just a moment. We won't get again that production by class until actually a couple of weeks ago. So let's look at pinto beans. Just to give you a reference point on planted acreage. And I'm looking at North Dakota relative to other acres. So when we think about pintos, North Dakota is a dominant pinto bean producer in the United States. So what we do up here makes a difference. The yields we have up here make a difference. The quality makes a difference. So a gold bar are North Dakota acres. The other acres are in the green. And the other acres tend to be some of those irrigated acres, especially in, we get into Nebraska, something like Wyoming. There's obviously some spillover into Minnesota. So if you notice planted acreage, we are down, which is not a big surprise because of some of the competition from other crops that we've had in the last couple of years. When we look at production, we don't obviously again have the production for 2023 by class. But we are expecting the total bushels to be down. Part of it again is because of the acreage, the tonnage. The acreage is down, but also our average yields were down. Okay, so we are expecting those numbers, those stack bars from North Dakota production versus other, to be down from last year. Not substantially, but we are starting to tighten up that balance sheet. Okay. Couple things to remind you about the pinto bean market. About 75% approximately, give or take from the year, is domestic consumption. So we look at the production side, now what about the use of the consumption side? Again, about 75% is domestic. What's interesting about domestic production, it's not just for pintos, but also for a lot of other commodities, is that domestic markets tend to be relatively stable. Okay, the amount that we consume doesn't change rapidly from year to year to year. Because the buyers that use it, we're looking at slower consumer trends that might have an influence on the demand base. How much do these different companies want? How much do they need? Now, we did see back in the COVID years, we did see a real spike in dry bean consumption. There's a lot of canned beans, there's a lot of at-home cooking that went on. And so we did see a spike in some of that. We're seeing that now restabilize into more of a pattern. So the current market is relatively slow. A lot of the kind of domestic buyers are also the ones that do quite a bit of contracting, forward contracting. I'll make a couple of comments about 2024 acreage in a minute. So some of that has already been booked. They've already purchased it, it's just and priced it. It's just a matter of when is this going to be delivered and how we manage our supply chain. So when we think about what puts stocks into the marketplace, what are those unexpected changes or things that might change people's perspective? We usually tend to look to the international markets because they're a lot harder to forecast. We don't know who's going to buy, we don't know how much they're going to buy, we don't know when they need to deliver. Now, one of the big changes we have seen from last year into this year is the shift in Mexican imports. Demand-based in Mexico, a lot of that has been because of the core producing regions for dry beans, in particular pinos in Mexico, was very dry last year. So their yields are down pretty significantly, which means you're going to have to look for some more international sources to be able to purchase that. So Mexican export demand has been strong, but it's been very sporadic. It's not been a nice, smooth acquisition, right? They kind of come in and buy in chunks, which is normal for an international market. And as a buyer, what do you want to do? What is your goal in buying internationally and from a pricing standpoint? What's your buying strategy? Try and get as low as possible, right? So you're going to let the market kind of soften a bit. And so you say, oh, this is a buying opportunity. You'll likely jump in and make some pretty good purchases. At least that's the typical strategy we see. Now, one of the things we have to be watching for is the financial strength of some of the Mexican buyers. There are people companies in Mexico that historically had been buying and got into themselves in financial trouble over the last couple of years because we've had very high prices. Okay, so the international buyers don't tend to be as covered. When you think about their needs in the U.S. market, as we typically see. So the surprise usually comes from this Mexican or the Republic market. So I just want to explain this very quickly. The columns on the far and left-hand side, those 4 columns, are 12-month totals. This is from ERS. This is from USD. The column on the far right-hand side, those 2 columns that are year to date. So this is on a marketing basis. Marketing for edible beans starts on September 1. Okay, so when you look at those columns on the far right-hand side, those are year-to-date, so these September and October. Now, we're always a little bit behind in getting information, right? It takes a while for it to be recorded and to be compiled and released. But look at the purchasing, not only historically, looking at the volumes we typically sent into Mexico, as well as the Dominican Republic, versus what they're buying today. Okay, so those are the purchases that have already hit the marketplace. And that's one of the reasons you saw that spike or pop in the market. We had, after harvest, we had some pretty stable numbers coming in, and all of a sudden it popped for a few weeks and then dropped back down. My expectation as we move forward is we see some similar kinds of systems, some similar types of pricing systems where we're going to look at relatively stable prices as we move through a time period, and all of a sudden there will be a shock to the market. You're going to see a Mexican buyer or probably a state in the Dominican Republic, and pricing will spike just temporarily until when the orders get filled, right? So what you're looking for and what you need to be thinking about is, paying attention to what's going on, asking your dealer, working with them and saying, okay, when there is these kinds of spikes and when there's these kinds of purchases, please keep me on the list, because as soon as that happens, I want to participate. Okay, so some of this is communicating kind of your strategy and your plans for purchasing with the buyer that you're normally working with, right? So if we look at far right-hand column at the very bottom, we're well ahead of the current export sales. Most of that, almost all of that, is because of Mexico. Now, I did borrow, I didn't steal this, I did borrow, I'm giving you attribution here. StatFile is one of those companies that private industry guys that do a lot of not only keeping track of what's happening, but also doing some forecasting. And I don't want to put a lot of pressure on these numbers, but I do want to use it as kind of a reference point, as kind of a starting point to say, okay, what are we looking like? What are kind of the current thought process and expectations? So the numbers in the black on the left-hand side, those numbers are actuals. Okay, those are the best numbers we have. I can cross-check this with other sources, and they're pretty reliable. Now, also please understand, don't worry too much about the absolute numbers, because most of that's in metric tons, because the international markets are in metric tons. It is in acres and pounds per acre for the production numbers, but everything else is in metric ton. Just look at the trends. I want you to think about what are the trends we're seeing within the industry and the marketplace. So if we look at total supply, that's compared to the forecast for 23 relative to the last several years, we're kind of in the middle of the range, maybe towards the lower end of that range. So the supplies are going to be a little bit tight. We don't have a tremendous amount of carryover from last year that we can bring into this marketing. We're a little thin on that to start with. Okay, look at the domestic production. So if you look in the middle of the middle of the column right here, that row of domestic production or consumption, excuse me, domestic consumption. That phase tends to stay relatively flat. We do have some ups and downs. We have to recognize that 2019, 2020 were some of our COVID years. There were some differences that went on there. And then look at the bouncing around of this uncertainty regarding these total exports. Because that's the again, on the margin, that's where most of our extra stuff has to go. When prices get high, it's usually the export market that starts backing away. When prices are low, we go to the export market to try and suck up or use that additional production that we have within the system. We also have some seed feed and wastage. If you look at the bottom line, and this is where I don't want to put a tremendous amount of pressure on this 2023 number yet, simply because we don't have the official production numbers yet, and there's a lot of kind of forecasting and guesstimates. I'll use that term on the total exports number. So that can change relatively quickly. But if you look at it in a relative sense, we are looking at a pretty tight marketing year coming into the 2023 and into 2024 production. Okay. Now looking at pricing and pricing activities. So the red line right here on kind of in the middle of the graphic is where we are as of yesterday. Okay. USDA does keep track of pricing. Usually on a weekly basis, there is some daily pricing that you know where we look. So I just wanted to give you some historical information about do we see some seasonality? Are there certain time periods during the year that we see more volatility or less volatility? Now, if we look at this and looking at these time periods, and I guess I didn't match up the graphics very well. We get into the January time frame and it tends to be relatively stable, relatively quiet until we get into when? Usually as we get closer to the planting season. That's when there's more uncertainty about how many acres will be planted in 2024. What does that mean for the value of the crop that we have in storage right now today, especially for the product? Now, if you do notice, we do have this slight increase. We've seen these slight recovery in bean prices, primarily driven by that international demand, the Mexican demand. So right now, the things as I talk to some of the dealers and what are they looking for, what are they expecting to see? The big wild card, the big unknown is how much do the Mexicans really need, how much are they willing to pay for, and then what pricing was. And again, I don't have that answer. I wish I knew what that was going to look like, but that's going to be at least short term the key in the market movements as we move forward. Okay. Questions about beans? I do think we're going to have, to my knowledge, there isn't any 2024 contracts available yet. Maybe you guys have heard some or talked to your dealers. The folks that you deal with, your buyers, but I haven't heard of any 24 contracts out yet. My expectation is the industry is going to be a little bit slow to come out with numbers this year. I think we're going to try and wait and be a bit more cautious. They do need more acreage. We have to try and look at bumping the acreage a bit to rebuild some of the inventories, in particular for pinto beans. They're going to try and incentivize some additional plantings. The question is, at what price are you going to be able to buy those acres? And a lot of that is going to depend obviously on pricing there. Not on the soybeans, but other competing crops. So questions on pinto before using acres. Hearing none, I'll move on. And I'll be around all day, guys. So if you do have questions, we'll talk about that. So let's go to Navy. Kind of a similar story, but there's not the large export demand. We're seeing some shifts going on, but it's a bit different. So when you look at North Dakota production from an acreage standpoint, which is the gold bar, which is the green bar, which is other areas, we are a significant player, but not as large. Okay, so what happens here locally is important we have to look at other production areas like Michigan, like Minnesota, to try and look at what's actually happening from the total production standpoint. Again, we don't have a class breakdown. We don't have the breakdown by subclass and maybe versus minnows, but we do expect the production numbers to be down, not only because of planted acreage, but also the national average yields were a bit lower. We are expecting to see a bit of a retracement. Now, just as a comment, and I forgot to mention this before, from a quality perspective, I haven't really heard any major complaints in quality for both the gates and minnows or the eggs. The harvest came in good. Yes, we had a little bit of a drier growing season, the yields were down, but the quality profile looks very, very good, which is, again, very nice because it's much easier to market a high quality crop versus something that has some issues. So, a little bit different story here. Domestic usage for maize accounts for anywhere from 50 to 60%. Kind of depends upon the year. It's still domestic use is the dominant use for maize. Okay, it's still our dominant use. I'll show you some graphics in a minute. It also tends to be relatively stable from one year into the next. But again, the domestic demand is relatively slow. Just like in the pinto market, a lot of the domestic Navy buyers are the ones that do a lot of forward pricing, forward contracting, to make sure that they have their available supplies in the pipeline and they can manage that pipeline as they go. Now, the three big users from an export market for navies is the UK, United Kingdom, i.e. Great Britain, Italy, and Canada. Now, just on a sidebar, a lot of the our Canadian exports are really transshipments. So they're grown here in the United States, they're moved into the Canadian market supply chain, and then from the Canadian supply chain, they go into the international market. So Canada's kind of an intermediary step for all of that. But when USDA tracks all of this, they do track the first origin. So it's the first country in the line. After that, they don't worry about what happens later on. So export sales into Italy have been well ahead of last year. So last year we had a big surge of exports into the UK, United Kingdom, and not so much into Italy. This year it's the exact opposite. And I do think some of that is these transshipments from Canada, because there's several of the Canadian buyers have a very good working relationship with some of the folks in Britain. So if we look at the numbers, again, the columns on the far, the four columns on the left are the ones that are annualized totals to give you a total year marketing perspective. On the two on the far right hand side are year to date. So that would just be September and October. Again, if you look at the UK, very similar to the export pace last year, but if you look at last year's numbers and relative to history, they were down to it. Now, if you look at Italy, the Italian numbers are up significantly. Now, this, in my opinion, I have to be a bit careful. I do think this might be a timing issue. For all of the Italians are a little bit short. They came in early in the season. We'll have to wait to see if that buying continues throughout the rest of the marketing. That's in the back of my mind. That's one of the things I'm trying to figure out whether that's a kind of a seasonal shift. We're looking at these larger purchases and continuing throughout the rest of the marketing year, or is this something where they're just front loading from their purchases in waiting for taking advantage of lower harvest costs? On the Canadian numbers, if you look at today's numbers, just in the first 2 months versus last year, look at that. That's a pretty significant rebound. Last year was a much slower year for U.S. exports in the Canadian market. They're being a bit much more aggressive right now. And again, in my view, from when I'm talking to the industry people, a lot of that is kind of moving what we're going from the United States into Canada that's been transloaded into other markets. If you look at the total number from the bottom, we are ahead of last year's number, which is a pretty good demand base, even though prices have been relatively strong compared to this year. Again, this is from Stat Plus, so I want to give them complete credit for what they're doing. I do want to focus kind of on that green column on the right-hand side, just like in the pinto market. I don't want to put a tremendous amount of pressure on this, but it is at least an industry-based estimate. It gives you a reference point to start thinking about what's going on. So just to review very quickly, again, when we look at total supply, we are looking at total supply to be down a bit, combination of acreage as well as yields. When we think about domestic consumption, again, relatively stable. You look from year in and year out, that from a variability standpoint, that is the big changes. The uncertainty and those bigger shocks or those bigger swings tend to come in the export markets. And again, we can look at the European market versus the Americas, i.e. primarily Canada, and then the others. So we are looking at a relatively strong export year right now. At least that's the expectation. That's what we're thinking about. When we come down to the ending stocks number here, again, I don't want to put a tremendous amount of pressure on that yet, because there is a lot of kind of forecasting and estimates going into that. But it is looking like we're tightening up. So the moral of the story, when you think about what's going on in the Navy market, and we've had relatively flat, stable prices for a while. We do tend to see it beginning that April, May time period. We're looking at how many industries are going to be planted. Then the market gets a little bit more sensitive to what the news and what's happening. My expectation is for the next probably February into probably March, relatively stable prices unless we see some big unexpected export market shock. But it won't be until we get into this discussion about new crop pricing, what's going to happen in 2024, when we start to see some changes. I want to make sure I stay on time. Perfect. So, what do I just do? Big recap. The market has seen more activity in the Canadian market. When we think about 2024 pricing, my expectation is the contracts will be available. I think there's going to be a lot of interest in growing acreage and trying to get a few more acres planted this 2024 season. But the buyers, not only local buyers, but also the domestic buyers, will be a bit cautious and not want to get too far ahead of this. So I want to wait to see kind of what's happening in the major grains, primarily corn, soybeans, and wheat, and say, okay, how aggressively do we have to come out to be able to hold the acres we have, plus add a few? They don't want to see these big swings in planted acreage. Okay, questions on navies? I'll jump to barley. Okay, barley market. USDA does a pretty good job of reporting barley. It's part of the WASD report, that large reports that come out for the World Agriculture Supply and Demand Estimates. Couple things that went on this last year. So 23, 24, these are the December numbers for forecast. The top half of this is the production numbers. I feel relatively comfortable with that. Again, we'll get the final official numbers. Well, actually, we have the final official numbers for barley because they came on the small grains report. So the top half of this table will not change. It's the bottom half that's the forecast. Okay, so when you look at total production was up this year. And that's a combination of better, a little bit higher planted and harvested acres numbers, but also better yields. Everybody that I talked to looked at that and said, well, wait a minute. Yeah, our barley crop was pretty good, but it wasn't that good. Well, you also have to realize this barley is produced in a lot of different other states, and I'll show you some numbers in just a moment. So when we look at the consumption numbers, and I just want to show you the absolute numbers here. I've got a graphic that kind of shows the general trends. One of the troubling aspects of this is when you think about food, alcohol, and industrial use. That's primarily part that goes into malting for the alcohol industry, primarily beer. Okay, and there's a couple of things that are going on. There's some trends in beer consumption, but there's also some trends in manufacturing, basically the processing. We're starting to get a bit more efficient, which I'll talk about in just a minute. On the flip side, when we think about feed and residual, now technically it is feed and residual, but I'm going to talk about the feed pilot right now. Usually when we think about barley and barley feed, historically, that's been for large animals. Corn, it's been a substitute for corn. But what is the kind of the new kid on the block when it comes to the feed industry in barley? Pet food. And most of the growth that we're seeing here is in that pet food industry. Okay, and the expectation is that will continue to grow. It might be a little slow, but the expectation is that will continue to grow as barley becomes more of a leading into the pet food market, primarily for cats and dogs. Okay, so looking at the bottom line, here's one of the challenges we have. Our inventories are going to be pretty strong this year. And not only do we have lots of production, we've got bushels out here, but the quality profile is very good. So you think from a malting barley standpoint, the acceptance rates, what percentage of all the bushels produced will actually have the quality that's required to go into the malting process was very, very high. Has been for the last couple of years. Okay, so part of this is the quality attributes. So it's the supply relative to the demand. Think about pricing. Now, the red line that bounces around quite a bit, that's the North Dakota numbers for total production. This is total bushels produced. You can see kind of the trends that we've gone over for the last 20, almost 25 years now. The purple line is Idaho, relatively stable. There's a pocket in Idaho that is irrigated barley production. It's part of their rotation systems. It works very well for them. They also have a pretty good supply chain to the Miller Coors lines, Coors Light and Coors system, and that's all contracted, of course. But because of irrigated production, they have less variability, not only in quality, but also in quantity. Okay. Now, the last couple of years, the surprise to some of us has been not only the acreage, but also the production potential coming out of Montana. Okay, and in particular, as the industry has shifted from a 6-row to 2-row varieties. That shift from 6-row to 2-row, part of that is driven by the craft industry, but also now some of the major brewers are realizing that they can do some pretty good brewing for even major, what they call engine breweries, the traditional Bud Lights, Millers, okay, with 2-row varieties versus the 6-row. So as you guys have looked at the varieties that are acceptable, the kinds of contracts that are available, there's been this movement towards its 2-row varieties, which have higher conversion factors, i.e. you can make more beer out of a bushel of 2-row barley than you can out of a bushel of 6-row barley. Okay. So supply has been very good. Now let's look at the demand side. That green line on the very top, that is that food, alcohol, and industrial use, i.e. translation, shorthand, that's our malting industry. And that malt then goes into the beer. So what's been happening to the amount of barley going into beer manufacturing? And going down for 2 reasons. Number one, total beer consumption in the US has slowly been slipping. Look at total beer consumption, mainly because there's more substitutes now. What are the things that are showing up that all the college kids are drinking? Seltzers and ciders. And now seltzers and ciders are starting to take away some of the beer consumption. Okay, now, my opinion, this is my opinion. I want to separate my opinion from what others are talking about. But I think USDA is overestimating the drought. I think that's a little bit aggressive. I don't think it'll be quite that large a shift. But we'll have to wait to see. And I've been wrong before, and I'll be wrong again. That's just my opinion. On the margin, I don't think it's going to make a big difference. I don't think it's going to have a huge, whether they're plus or minus the number they have forecasted right now. But again, I also want to point to this increase in the feed component. So there is going to be more and more competition and some relatively good contracts out there for the pet food market. And we have to keep that in mind. Okay. So when we look at total inventories, and I want to focus on those blue bars on the bottom, and I know I have about 30 seconds left. The blue bars are the inventory. Those inventories are continuing to grow from a combination of good production, high acceptance rates, but also softening in demand. It's a slow trend that's going on over time. At what point will that stabilize? I don't know. Now, the one thing I do know as we move to some questions is that the contracts, from my understanding, the contracts for 2024 again have been relatively quiet so far. And the same thing with, just like in the Finland market, the barley market is looking and saying, not only the feeds, the food grades, the pet food market, but also the maltsters are looking and saying, we need to hold some acres. We don't want too much slippage, but we don't need the acreage we had last year. We've got these inventories, we've got this backlog of inventories. It's going to take a while to be able to work our way through that. for looking at the possibility of some slippage in acreage, but they don't want too much because they do need to have that forward base.